If you are on Social Security or Medicare right now and you are still paying your Part B premium, your property tax bill, your prescription copays, and your utility bills out of your own pocket every single month, I need you to stop whatever you are doing and watch every second of this video, because what I am about to tell you is going to change the financial reality of your retirement starting this month. And I am not talking about coupons. I am not talking about discount cards. I am talking about federally mandated programs, legal exemptions, and government money that is sitting in accounts right now with your name on it that nobody at the Social Security Administration is ever going to call you and tell you about. Not now, not ever. And the longer you wait, the more of that money disappears forever. Because these programs run on first come, first served funding cycles, and 2026 is already moving fast. I have spent years studying the hidden architecture of government benefit programs, the rules buried in Federal Register documents that the average senior never sees, the exemptions that county assessors and Medicare contractors hope you never ask about, and the forms that can legally eliminate thousands of dollars in annual expenses overnight. And today I am laying out 5 specific bills that millions of Americans over 65 are paying right now that they are legally entitled to have covered, reduced, or eliminated entirely. And by the time we get to the 5th one, you are going to be absolutely stunned that nobody told you this sooner, because the 5th bill on this list involves a rule so specific and so powerful that financial advisors rarely even mention it. And it could be worth more to you annually than anything else I cover today. So stay with me all the way to the end, because I am saving the single most important exemption for last, and I need you to hear all of it. Let us start with Bill number 1, your Medicare Part B premium, which in 2026 sits at a standard rate of $185 per month, meaning that if you and your spouse are both on Medicare, you are sending $370 every single month to the federal government for health coverage that you may have the legal right to have completely paid for by your state. And almost nobody knows this because the program responsible is called the Medicare Savings Program, and it has 4 tiers, and each tier eliminates a different portion of what you pay, and the Social Security Administration will not enroll you automatically, even if you already qualify based on the income information they already have on file from your benefit payments. The first tier is called the Qualified Medicare Beneficiary Program, commonly known as QMB, and in 2026, this program pays your entire Medicare Part B premium, your Part A premium if you have one, your deductibles, and your co-payments, meaning your out-of-pocket cost for Medicare goes to essentially zero. And to qualify, you need to have an individual monthly income at or below roughly $1,100, or joint income at or below roughly $1,485, with asset limits that your state Medicaid office will walk you through when you call, and those asset limits in most states do not count your home, your car, or your burial funds, so do not assume you have too much money before you actually check. The second tier is the Specified Low-Income Medicare Beneficiary Program, known as SLMB, and this one specifically targets that $185 monthly premium and pays it entirely. And the income limit for SLMB in 2026 for an individual runs up to approximately $1,311 per month, and for a couple, it goes up to approximately $1,771 per month. And if you are sitting somewhere between those QMB and SLMB income thresholds, you need to pick up the phone today and call your local Medicaid office, because the application is straightforward and the benefit is immediate once approved. And I want you to hear this clearly. Every month you delay is another $185 that is gone forever. And there is no retroactive payment for months you did not apply. So the urgency is real. Now, before we get to bill number 2, I want you to hold on to something I am going to tell you later in this video about a strategy involving overpaid premiums and what is called an IRMAA appeal that can put a check in your mailbox within 90 days. And I am going to give you the exact form number, and I am going to tell you precisely what to say when you submit it. But first, I need to cover your prescription drug costs, because this is where seniors are getting absolutely crushed. and the fix is faster than almost anything else on this list. Bill number 2 is your prescription drug bill. And if you are paying full price at the pharmacy for your medications, if you are skipping doses to make pills last longer, if you are choosing between groceries and your blood pressure medication, then you need to hear about a program called Extra Help, which is also known as the Low Income Subsidy. And it is administered directly through the Social Security Administration. And it is one of the most underutilized benefit programs in the entire federal system, with billions of dollars in available assistance going unclaimed every single year because nobody tells seniors it exists. Extra Help dramatically reduces or eliminates your Part D prescription drug costs, and in 2026, for those who qualify at the full benefit level, your generic prescription copays are capped at $5.1 per fill, and your brand name drug copays are capped at $12.65. And your annual deductible under Part D drops to zero, meaning you pay nothing before your coverage kicks in. And for people who are currently paying $40, $60, or even $100 per prescription out of pocket every month, this change alone can free up hundreds of dollars immediately. The income limits for Extra Help in 2026 allow for individual income up to approximately $22,590 per year, and for married couples up to approximately $30,660 per year, and resources including your bank accounts, investments, and personal property other than your home are limited, but still generous enough that a large percentage of people reading this qualify and simply have never applied. And you apply by calling the Social Security Administration directly at 1-800-772-1213 or by going online to the SSA website and filing the application for Extra Help. And the process takes less than 30 minutes, and the savings can begin within weeks. Now, I promised you something critical about Medicare premium overpayments, and I need to deliver that now because this is one of the most powerful financial moves a retired senior can make, and it is completely legal, and most people have never heard of it. This is about the IRMAA surcharge, which stands for Income-Related Monthly Adjustment Amount. And it is a premium surcharge that Medicare adds to your Part B and Part D costs if your income from 2 years prior exceeded certain thresholds, meaning that if you had a high income year in 2023, Medicare is charging you extra right now in 2025 based on that income. And here is the critical part. If your income dropped significantly after you retired, after a spouse died, after you sold a property, or after any major life change, you have the legal right to appeal that surcharge and have it removed immediately using a form called SSA 44, and that form is titled Medicare Income Related Monthly Adjustment Amount Life-Changing Event, and you can download it directly from the SSA website, and when you submit it with documentation showing your current reduced income, the SSA is required by law to recalculate your premium based on your actual current financial situation rather than a 2-year-old tax return that no longer reflects reality. And for people paying IRMAA surcharges, the monthly overcharge can range from $74 to over $443 per person per month, depending on your income bracket, meaning that a successful SSA 44 appeal can save a married couple over $1,000 per month, and in some cases generate a refund of overpaid premiums going back to the date your life change occurred. So if you or your spouse has retired in the last 2 years, if your income has dropped for any qualifying reason, pull up that SSA 44 form today and do not wait. But right now, I want to foreshadow what is coming at the end of this video, because Bill number 5 is something different. It is not a federal program. It is not an SSA form. It is a local government exemption that is completely invisible to most seniors because the people who administer it have no incentive to tell you about it. In fact, in many counties, the assessor's office is legally not required to notify you of your eligibility. And when I reveal exactly what this is and how to claim it, you are going to want to write down every word, so stay with me. Bill number 3 on our list is your home heating and cooling costs. And if you are a senior with limited income and you have ever struggled to pay your electric bill in August or your heating bill in January, there is a federal program called LIHEAP, which stands for the Low Income Home Energy Assistance Program, and it is funded federally but distributed through your state and your county. and it pays a portion of your energy bills directly to your utility company on your behalf. And in many states, the benefit can be as high as $1,000 or more per heating season, depending on your household size and income level. And this program is dangerously underfunded relative to demand, which is exactly why I keep saying that 2026 funding cycles are first come, first served. Because when the money in your county runs out, it is gone until the next funding cycle opens, and there are seniors every single year who call to apply and are told the funds are exhausted for the season, and that is money they will never get back. To find your state's LIHEAP office and apply immediately, go online and search LIHEAP plus your state name, or call the National Energy Assistance Referral Hotline. And when you call, have your most recent utility bill ready, your household income information, and your Social Security award letter. And the application process is typically simple and fast, and your state office may even conduct the application over the phone. Now, I told you bill number 5 is the one that will shock you, and we are getting close. But before we get there, I need you to hear about bill number 4, because this one is going to make some of you angry when you realize how long you have been overpaying without knowing it. Bill number 4 is your prescription drug plan premium itself, not the copays we already covered, but the monthly premium you pay for your Medicare Part D plan. And here is what most seniors do not know. Every year during Medicare open enrollment, which runs from October 15 through December 7, you have the legal right to switch your Part D plan, and in 2026, there are Part D plans available in virtually every state with $0 monthly premiums for seniors who qualify for extra help or for people whose specific drug list aligns with a low-cost formulary. And the difference between staying on the wrong plan and switching to the right one can be $50, $80, or even $120 per month in premium savings alone before you even count the drug cost reductions. And yet the vast majority of seniors never review their plan. They just let it auto-renew year after year, paying more than they need to pay because nobody from Medicare called to say your plan changed and there is a better one available for you now. If you missed the last open enrollment, mark October 15 on your calendar right now, and in the meantime, call 1-800-MEDICARE and ask them to connect you with a state health insurance assistance program counselor known as SHIP, and those counselors are federally funded, completely free, and will do a full plan comparison with you to make sure you are in the lowest cost plan available for your specific medications in your specific zip code. And now we are here, bill number 5. And I want you to pay very close attention because what I am about to tell you is the single most powerful financial opportunity on this entire list for seniors who own their home, and it is the one that your county assessor's office is almost certainly never going to volunteer to tell you about. We are talking about your property tax bill, and specifically, we are talking about the network of senior property tax exemptions, senior homestead freezes, circuit breaker credits, and veterans' property tax deferrals that exist in nearly every single county in America, and which the overwhelming majority of eligible seniors are not claiming because the application process is local. It is buried in county government websites, and nobody at the state or federal level has any obligation to notify you that you qualify. Here is how this works in practice. In most states, seniors who are 65 or older and who meet certain income thresholds can apply for what is called a senior homestead exemption, which either reduces the taxable assessed value of their home, which directly lowers the tax bill, or in some states, it completely freezes the assessed value of their home so that even as property values rise dramatically around them, their tax bill stays fixed at the level it was when they first applied. In states like Illinois, the Senior Citizens Assessment Freeze Homestead Exemption means that if you are 65 or older and your household income was $65,000 or less in 2025, you can lock your assessed value in place and stop paying for rising valuations that have nothing to do with your ability to pay. In Texas, the over 65 homestead exemption gives you an additional $10,000 reduction in your school district taxes on top of the standard homestead exemption, and it freezes your school taxes permanently so they can never go higher as long as you live in that home. In Florida, the senior homestead exemption for low-income seniors can provide an additional exemption of up to $50,000 on top of the standard $25,000 homestead exemption, effectively cutting your taxable home value in half if your household income is below the county income limit. In states like California, the Property Tax Postponement Program allows seniors with household incomes of $51,100 or less to defer their property taxes entirely until the home is sold or transferred, meaning you stop writing that check every single year and the obligation simply waits until after you are gone, never disrupting your monthly budget ever again. And here is the part that will make you genuinely angry. In most counties, you have to apply for these exemptions yourself. The county assessor already knows how old you are because your property records show when you bought the home and your driver's license records are often cross-referenced. The assessor knows your address. In many cases, the county has income data from state tax filings, but they will not automatically apply these exemptions because every dollar of property tax you overpay is a dollar of county revenue that they keep, and so the entire system is structured to let you remain unaware until you ask. And once you ask, once you file the application, the savings begin, and in some counties, the exemption can be retroactively applied to prior years if you can show you were eligible but unaware, which means there may be money owed back to you right now sitting in the county assessor's office that you have never claimed. The average senior homestead exemption in America saves between $500 and $2,000 per year, depending on the state, the county, and the home value, and for seniors in high property value areas, the savings from a freeze alone over a 10-year period can be tens of thousands of dollars, and the only thing standing between you and that money is a phone call to your county assessor's office or a visit to their website to download the senior exemption application, which in most counties takes under 20 minutes to complete. And when you combine all 5 of these bills, the Medicare Part B premium, eliminated through the QMB or SLMB programs, the prescription drug costs slashed to $5.1 per generic through extra help, the IRMAA surcharge reversed through Form SSA 44, the energy bills partially covered by LIHEAP, and the property tax reduced or frozen through your county's senior exemption, you are looking at a potential combined savings that in many cases exceeds $5,000 to $10,000 per year. And that is not a hypothetical. That is math based on real program benefit levels and real exemption values that are available right now in 2026 and that are going completely unclaimed by millions of seniors across this country simply because the systems designed to administer them have no incentive to find you and tell you that you qualify. Now, here is what I need you to do right now today. First, call your local Medicaid office and ask specifically about the Medicare Savings Program, including QMB and SLMB, and bring your Social Security Award letter and your most recent bank statement to that call. Second, call the Social Security Administration at 1-800-772-1213 and apply for extra help for your prescription costs, and do it before the next refill because those savings begin almost immediately upon approval. Third, if your income has dropped since retirement, download Form SSA 44 from the SSA website and submit your IRMAA appeal with documentation of your life change, because every month you wait is another month of surcharge overpayment. Fourth, search LIHEAP plus your state name online and apply for energy assistance before your state's 2026 funding cycle closes, because that money runs out and it does not come back until next year. And fifth, call your county assessor's office today. Ask specifically about senior property tax exemptions, senior homestead freeze programs, and any income-based circuit breaker credits available for homeowners over 65, and ask them to mail you every application they have, because there may be multiple programs you qualify for simultaneously. If this video gave you information that you did not have before, I need you to hit that subscribe button right now, because every week we release videos exactly like this one, videos that pull back the curtain on government benefit programs, legal exemptions, and financial strategies that the system is not designed to tell you about, And our community of seniors across this country is using this information to reclaim thousands of dollars every single year that they were previously losing for no reason other than not knowing these rules existed. And then I need you to share this video. Not tomorrow, right now. Share it with a neighbor, share it with a sibling, share it with anyone over 60 that you care about, because there is someone in your life who is sitting at their kitchen table right now trying to figure out how to pay their Medicare premium and their property tax on a fixed income, and they do not know that the answer is one phone call away, and you sharing this video could be the thing that changes their retirement. And that matters, because this is not about politics, this is not about ideology. This is about American seniors getting access to benefits they have already earned, programs they have already paid into, and exemptions that the law already guarantees them. And the only thing standing in the way is information. And today you got that information, so make that call, file that application, and take back what is yours.